Hello, everybody. Welcome back to another episode of Finance Junkies. It is December 13th, 2023, 9:01 p.m. The Federal Reserve of the United States of America has decided they will pause interest rates, and they have signaled to the surprise to the investing community, to the broader global equity markets, that three cuts will be coming in 2024. If 3 hikes were coming, we would not have seen what we saw this morning. We're waiting for KRIS and VITALY to get here. We have a special guest who's going to be joining a little bit. Carlos, how'd you feel with what the Fed said today?
That was good. It's good. It's nice to see, isn't it? I mean, we expected it, but man, it's nice to just see. All right, we're getting some love. The pause is not. This is just an indication, like a hint of what'll happen when they finally start lowering rates. You know what I mean? It's like a drug addict that just is dying for like the slightest little fix. Even like a 0.25% drop would just be amazing. Oh, I'm seeing all the likes come out. Thanks, guys.
Philip Rizzo, Bay Ray, thank you all for being here.
People starting late. That's nice.
Carlos, you were telling me after right before the pod started that today felt like a day where you felt a little bit more validated. Can you speak on that?
Oh yeah, I was saying like it was today. It was a little bit.
Real quick, while you start, let me just introduce our special guest who's joining us today. Our good macro economist Steve is with us here today. Steve, how are you?
What up, Steve?
What's going on, guys?
All right, Carlos, go ahead.
Doing the brick background now. What the fuck is
that? You did the bricks because of me? You're a copy.
Yeah, I want to be like a mid and Tavis.
Steve, you have some background noise going on.
Yeah.
Or is that KRIS? Hold on, let me mute KRIS.
Going over my building.
No, that was KRIS. Sorry, that was KRIS. KRIS, you have a background noise. All right, Steve, you're good. All right, Carlos, go ahead. Why did you feel validated today when you saw your portfolio?
Well, it was a combination of today and like when Bitcoin was around the 45,000. I was telling you, it's just this feeling of validation. It's this feeling of like you're so far removed from when you were DCAing into something, and as much conviction as you have, you're like, nah, all right, I'm DCAing. But when it actually pays off and the numbers that you're seeing in your portfolio are life-changing numbers, it's just a feeling that you can't replicate, and it takes so long to get to that point. That when it happens.
I want to talk about that word validation. Did you feel validated that you made the right decisions when the equities or the assets you were investing in were significantly lower than they were today?
Yeah.
Is that why you felt validated?
Yeah, because you have a thesis and you have a risk profile attached to that thesis, and you throw your hard-earned money into it. I mean, at the end of the day, the money that I threw in there, I had to trade a lot of my labor for. And if it goes away, then I essentially worked for free, right? And so you're saying I'm leveraging all of this work that I did to take this pile of cash and throw it into this asset that I think is going to go here because of these reasons. And for me, it's been so long for some of these things that I've been holding them that you almost forget. They're almost just like, it's like shit in your garage, like something you find in storage. And then one day you're like, oh my God, it's working out. This is happening. It's freaking awesome. And so waking up one day, realizing like I could pay my mortgage right now. I'm only paying mortgage payments because I choose to. It's a good feeling.
It's a really special thing, especially because the people in the chat that are here, people that follow us on Twitter, YouTube, all that stuff. It's like all of us are doing something that 99.9% of people are not doing, which is we're taking our capital and making a risk. We're putting it in equities and assets and cryptos, and we're trying to see if we can generate some level of financial independence for ourselves. And it's a hard thing to do, just to even be interested about. I mean, I told you I had to like beg my sister to max out her Roth IRA when she had 6,500. She was so scared to do it, right? So the fact that all of us are taking these risks, it really matters.
Here's the deal. There's no other game in town. I mean, unless it's like this or real estate, I'm sorry, there's no other game in town. I don't know anyone that retired off their income. So either you understand the game and you passively give your money to somebody and you hope that your Roth IRA or your 401k is going to naturally grow, and you giving somebody else your money, aka your time, to hopefully on the chance that you'll get to retire with some dignity, or you do the hard work and you study the markets, as exciting and as boring as they could be, and you call your own shots. I'd rather be the guy that's calling my own shots, right? If the plane's going down at 30,000 feet, I want my hands on the controls. So it just feels good. Honestly, it just feels good. And with all the pain that we've had the last couple of years, it is nice to start seeing some of these things take off. And I am still DCAing, like, I'm sorry, Tesla's at the same level that it was almost 2 years ago, 230.
And revenue's tripled. Yep.
Still DCAing, man. This is what it looks like when the shit is going sideways. You just keep buying. And I feel like that moment is coming for this company too, as more people wake up to the story. So I got a bunch of shots on goal, and it looks like a good number of them are going to hit.
All right, so let me do a proper introduction to the podcast. Thank you, everybody, for being here. 267 people. We've got KRIS with us tonight. Steve, VITALY might make it. He might be working late. If not, we've got Steve. A lot of you guys are excited for Steve. So, Steve, you're a fan favorite of the podcast, and you got the bricks in the background that people are saying are realer than mine. This is another original comment from Dean. Steve's bricks look more real than Mitt's. Steve has some interesting stuff to say about Tesla. We're going to get to towards the end of the pod. I think a lot of people will be very interested to hear what he has to say. But let's start it off here. Jerome Powell got on stage today. He drew his little dot plot like he's a third grader with this coloring book. Okay, I found out about what a dot plot it was this year. I didn't even know the Fed draws these things. And the market, last time they did this, expected a 5.1% Fed funds rate by the end of 2024. Right now it's at 5.5, so it's really not coming down that much. The market, or Jerome Powell said today, we're going to cut it 3 times, not 2 times. It's going to go to 4.6%. As soon as he said that, as soon as that got word to the markets, as soon as they basically signaled they are absolutely pausing and they're not raising again, it could happen theoretically, but the chances of that is incredibly low, and that the next decision will likely be a cut. That made the markets get very excited. S&P is at 472 right now after hours. The S&P.
Wait.
Oh, you gotta hold on.
Your mic,
The next
Chris.
decision.
Your mic, Chris.
Hold on.
You gotta hold on.
What's wrong?
You sound like you're being interrogated by the police.
No, they're doing 3 cuts. They're saying 4.6% by the end of 2024.
Not say the next thing is a rate cut, though.
No. I'm saying more likely than not, the next thing is either going to be a pause or a cut. It's definitely not going to be a hike. At least that's what the Fed signaled.
That's not what he said.
What do you mean that's not what he said?
Do we need to play the whole conference live? That's not what he said.
Just play a clip. Or what did he say?
We're not going to play the clip because I don't want to listen to him. I want to get into it.
What did he say?
So
first of all, he did not say he's hiking. He did not say he's cutting. He did not say they're definitely pausing. All 3 could happen next time. But more likely than not, they are going to definitely not hike in terms of probabilities. A cut is what the market's pricing in, which is why the market's up. Probably going to be a pause. But it's bullish regardless.
It is ultimately bullish. You are partly correct. Yeah. What he said is the door is open for another hike if warranted.
That's exactly what I just said 5 minutes ago. I said he could hike, but it's probabilities. Yes, correct. All right. So let me just do the intro, and then I'll let you get into it. This is so complicated for no reason. The point is the markets are perceiving the Fed as likely not hiking again. Is the door open? Yes. The door is always open for them to hike. A black swan event, something happens, they're going to hike. More likely than not, the market is perceiving there's not going to be a hike. There's likely going to be a cut as the perception of the market is. As a result, the S&P has gone up, as Philip says, close the effing door from Jerome Powell, who said that a couple of weeks ago. And we're at 472 after hours right now. We were at 478 in January of 2022 when the market peaked. So we are 6 points away, basically a percentage point, from being at S&P all-time highs. Market was excited. A lot of stocks went up. A lot of companies got excited. A lot of companies that are obviously benefit from interest rates. Enphase was up 6-7%. So we'll put this out here right now. We'll start with you, Steve. We'll start with you since you're the guest here. What was your perception of what Jerome Powell said? Are you bullish? Do you think the market is getting this wrong? Is there going to be a massive sell-off? Give me your raw thoughts on what Jerome Powell said.
No, I think it's bullish. I do not think there's going to be a massive sell-off. What he said was a lot of what people wanted to hear, but there's also a lot of misinterpretation. The door is open for another hike if warranted. But what I was surprised that he came out and said was he actually said 4.6% is
correct.
The median for next year.
Correct.
And that basically says that a cut would need to start by June at latest to get 3 25 bip cuts in.
Which is why the March percentage of cuts went higher today, because people thought, right.
So it is ultimately bullish because where rates are now are not going to stay much longer. And even if they go up by another 25 bips, it's probably not going to break anything. The economy is strong enough that it'll absorb it. And the reason that it is so favorable for the markets is because that 1.7 trillion wall of debt for REITs and real estate is less of a factor now, because when it starts maturing in the middle of 2024 to the end of 2024, because that wall matures over the next 18 to 24 months, it's much less of a problem because you're going to have declining rates. So they're going to be able to refinance at a much more favorable level, and the banks won't be held. The assets won't be going to the banks. They won't be holding on to the keys of unwanted assets that they're going to fire sale and lose money on. This is definitely bullish unless something absolutely blows up.
This was a bailout of two industries. Okay,
Yes.
One, the property sector, the real estate sector. It was a bailout of them, and two, the regional banks who own all that debt. Those two sectors rallied like crazy today. If you look at the KRE was rallying hardcore. This is what I've been saying throughout the year. Like, hey, the Fed is not going to let most of these regional banks go under, right? And why were the regional banks getting sold off? Because they had all these CRE loans on their balance sheet. So one of the things, and don't look at
CRE
that,
is commercial real estate for those.
Okay, yeah, there you go. So that's why the banks rallied today, and I think this is only the beginning of the rally for the regional banks because they have been still massively oversold. So go to the 5-year AMIT. So you can see here that they're still below the amount that they had. If you look at it on a PE basis, there are some regional banks that are trading at single-digit PEs that absolutely do not deserve to be at that single-digit PE mark. And one of them, of course, is the one that we hold, TFC.
TFC, baby.
That's right. So our spreads are printing like crazy. So yay. But I do think that next year we should see these two sectors be the ones that you want to focus in on. Companies that have a lot of debt that they're going to be able to refinance. So a lot of the property sector, that's how I'm positioning my portfolio. If you look at all the companies that I have, SLG has also been going up like crazy. That's right. The SLG army, baby.
Steve texted us in March about SLG. He said it's at 19 bucks. Buy this fucking stock. He gave us financial advice. He told us to buy it. Right, Steve? You gave us financial advice. You want to admit that?
I did not give you financial advice. I said I'm buying it heavy.
Which implied, hey guys, if you don't want to be dumb, buy it heavy with us. And then, but KRIS, is there any part of this that the market's getting wrong, or are we actually in a bull market now? Like, because yesterday you were a bit bearish. How are you feeling now?
So I think there's going to be a rotation now, and I see it clear as day because now Powell has left that door. He literally just slammed that door open right now. So you're going to see a lot of money from the sidelines and from big tech possibly moving into mid and small caps, but you have to be careful. But you have to be very careful with small caps because there are still a lot of zombie companies that are running up today. The example that I would give you today is Nikola. Look at what Nikola was doing today. I don't know what this up today. Yeah. So I would say be very careful in not investing in some crappy company, but there is definitely a sector-wide rotation going from mega cap now into the smaller caps. And so look for the quality companies in that. So look at Russell. Yeah. That's where you want to be. So, yeah.
And there's
Russell's up 4%.
So right now you have a combination of, and KRIS and I spoke about this the other day, 5.7 trillion in money markets sitting on the sidelines. That does not include CDs or T-bills that have maturity dates. That's liquid capital that can move into the markets at any given time. You also have a large cohort of baby boomers that will be retiring at some point. So a sector rotation in addition to capital coming off the sidelines, because once Big Daddy Powell cuts, once that first cut comes, people are going to try to front run the market.
Steve, they're already front running the market.
No, we haven't seen it yet.
Right.
We haven't seen it yet.
Yeah.
Once they cut that first cut, because they're going to try to squeeze whatever last they can out of this, and then they're going to move into income producing assets because they're going to try to recreate that yield. We've never seen 5.7 trillion in money markets. And then when CD ladders and T-bill ladders start to mature, more money is going to come in. You're going to have money chasing big tech as a catch-up trade. You're going to have money coming in to recreate the income that they became accustomed to getting at 4.5 to 5.5% rates. This is very bullish going forward for a lot of different things.
Even solar. And I got to talk to you guys about solar now.
Okay, VITALY, let's before we talk about solar.
That garbage, that shitty industry. Speaking of zombie companies.
Wait. So we're still in a bull market? Is that
all right, we'll do solar in a second. VITALY, what were your raw thoughts to what the Fed said today? Go ahead.
I didn't have to hear what the Fed said today. I saw what all of you said. When Chris is buying, we're in a bull market, which I've been saying all year. We're in a bull market. We're going on year 2 of a bull market. Finally, some bears are recognizing we're in a bull market. But still, like you said, how much money's on the sideline? 6 trillion?
5.7 trillion.
No, it's 6 trillion.
Money markets.
So 6 trillion is still sitting, not believing we're in a bull market. This is actually very good for us. We have a lot of room to go. That's what I think.
But that's really interesting, right? $6 trillion has gotten no more than 5% on their money this year. I mean, if you do the averages and all that stuff, right?
They've been fucked all year thinking that is going to get worse.
Right.
And it's not getting worse. There's going to be a catch-up.
It's not getting worse.
Now, you could see a small dip because people may take some profits going into the end of the year and then reestablish a new price point in January. But long-term or even medium-term, there's nothing that came out today that is at any point bearish.
You're also seeing a lot of capital being raised on the sidelines for opportunistic credit and opportunistic funds. So that's the other thing that I've been tracking on the side, and that's the other thing that I'm seeing, which is, there is a lot of capital to be deployed, but people are like, hey, wait a second, I may not have another 5-year, I may not have the treasury giving me 5%. So a lot of these endowments, because a lot of this money that we're looking at is not sitting in the retail shareholders' accounts. This is all money that's sitting in endowments, in pension funds, in sovereign wealth funds. So there is still a lot of money, not just in the US, but even outside of the US, looking for a home. And the US right now is the only one that's in an economic upswing. The rest are kind of like not doing so well. You go to China. China is absolutely dog shit right now. So not too many people want to even go that route. So a lot of that capital is going to find its way into US equities. But like I said, you have to be willing to look for the companies that have profitability and also now have a more favorable condition for the consumer to actually buy things. So the example that I would give is now Enphase and SolarEdge actually look appetizing because now you've got 2 factors coming in. You've got one, lower interest rates, which means that people can actually afford these solar panels. I mean, and microinverters and everything else that's associated with that. And then on top of it, you're going to see a lot of movement when it comes to housing, because now with lower interest rates, people are going to be buying and selling, which means a lot more inventory of homes is going to come on. So one of the things that a lot of people are going to be doing is if they buy a house, they're going to finance and say, hey, I should probably get a solar roof on top of it too. So as the credit conditions are lighter. So now anything that requires credit conditions to be more generous, they're going to rally into next year, especially if they've been sold off 60 to 70%. So both SolarEdge and Enphase would be the two.
So yeah, I want to point out Enphase still is around 70% off its highs. Just want to point that out. And the other thing I mentioned many times already, we have not hit all-time highs even in Google and Amazon. Okay, even the quality companies have not hit all-time highs. So whatever rally we had today, as rates continue to go down, as we discussed, inflation is going away many times. Believe me, we're going to all-time highs, at least in that major tech. It's going to happen.
And there's one other thing that I just want to point really. Oh,
Chris, just let me cut you off real quick.
Yeah,
I would wrong. They just updated the money market funds from the other day. It's over 6.1 trillion.
What I said.
Money markets.
What I said.
5.7.
Yeah.
And in Q2 of 2022, there was just over 5 trillion. The amount of money that has poured in over the past year, there's going to be a lot of money getting sucked out once he cuts for the first time.
Yeah.
Okay. So we'll continue on this conversation of solar real quick, but expanding it from solar, it's assets that are privy to lower interest rates. Now, here's the question I have for the panel. The Fed said 4.6% is their target. Maybe it's lower than that. Maybe it's a little higher, but 4.6 markets were excited because it wasn't 5.1. Is that enough for people to finance a Cybertruck or to finance microinverters? And like, is 4.6 is still a lot, right?
That was a point I was actually going to make, because it's nice to see Chris being bullish, but even coming down this little bit to 4.something%, when the rates were hitting this level on the way up, you still saw it as a negative. But now that we're coming back down to these levels, suddenly it's positive. I just think that there's been a lot of pent up pressure, and people want to buy. And people were buying it at these levels when we were on the way up, and I think people are still buying on the way down. But now that we're coming on the way down, I do think it's going to start relieving some of that pressure that people have.
Well, that's because remember, the market is forward looking. So what I'm saying to you guys right now,
so we told you.
No, shut up before you say go there. Remember, I was bearish on.
It sounded like what I said
on end phase. I was bearish on end phase all the way back in November before the rate cut, before the rate started to impact the general consumer. So you have to use the same logic and get ahead of this thing before all that stuff happens. And what did I say all throughout the year? The guidance that that end phase gave was weak guidance going forward, but it's going to be like a slingshot because anyone who was actually considering putting solar up there, they're going to be holding back on all that capital. Once they're actually able to finance it, they're gonna jump in. So the thing is, now you have to try to forward run the market, because if you wait until the interest rates cuts actually happen, that'll be too late. By that time, end phase could be at 200. So right now,
it feels like he's saying what I said a week ago, but he didn't.
No, here's the remedy. Here's the remedy. I think Vitaly and Carlos have been right on. Hey, when this thing drops, obviously rates will come down. And when rates come down, solar pent-up demand, like they were obviously correct on that. And if you got in at 70, 80, you've done really well. The problem is, Vitaly and Carlos, you guys were saying that when it was at 180. So that's where KRIS was right, because at 180, it's like that pent-up demand has yet to been shown because the Fed hasn't cut. So I think both of you guys were right. You guys were just both of you were like a little early and late. But now that the Fed has finally cut, I think both of you can agree.
You've got to think about the mind. You got to think about the mind of the consumer. Hold on. You got to think about the mind of the consumer. If you know you want solar on your roof and you know that solar is going to save you money in the long run, and you start seeing rates go up, KRIS is saying, "Oh man, I'm not gonna buy because the rates are going up." But somebody else might be thinking, "You know what? I should lock this in now before rates get any higher." That's what continued. That's what had people continue to buy when rates were going on the way up. Now, on the flip side of it, there's people that are like, man, I let it run too far. It's 5%. I can't afford it now. If it comes back down any little bit, I'm going to pull the trigger. And if it goes even lower, I'll refinance it at a later date. Either way, I think the customers were there at whatever price or whatever rate percentage. But I just think now you'll start to see it in the stock.
And remember, I said two things to you guys. If you remember, there's two market things that need to happen in order to make solar actually work. Number one, you need to have lower interest rates. And two, you need to have natural gas prices and everything else start to rise a little bit. Natural gas has not risen yet. Okay. Natural gas is still actually at lows, but that's because of the seasonally warm winter that we have. One of the things that I'm starting to see right now is a lot more pricing action that might happen next year. So just letting you know that energy prices will start to go up. Those higher energy prices will make consumers think about getting solar twice. And so right now we're setting up a good time to be in these companies, especially now that they've been oversold.
Well, at least you change your mind. That's what's important here.
No, changing my mind.
You got new data. You changed your mind. Yeah. Actually, listen. I'm giving you a compliment. Take it.
Yeah. No, I'll take it. But no, that's. I want to clarify that this is how you're supposed to actually invest, which is you wait for the data to come out and then you can make the move, right? Trying to do things.
But that's what I'm saying. Both of you guys are kind of right here. Because KRIS, you were right that you didn't have the right data when it was at 180 and the sucker fell to 72.
Wrong. He had the wrong data when it was 20 and nobody cared.
We're not going back 3 years.
Wrong.
We're not going back. Hold on. Let me finish.
I wasn't even around.
I didn't even know Enphase was. I didn't know microinverters. But this is so funny because at 180, KRIS, you were right. The data wasn't there. The problem was when it got to 72, which is like just ridiculous. You knew that rates were going to eventually come down, but you just weren't bullish in general. So like both of you guys were right about this. Now that it's unequivocally cuts are likely going to happen, I guess it's 72 was the bottom.
Well, that's the thing. So
okay, first of all, let me clarify this. Who cares if 72 is the bottom or the 100 is the bottom? It doesn't matter.
Well, no, it does matter. No, that's right. Because buying Tesla at 440 matters. You want your valuation.
No. This company is worth 15. Well, I forgot the current 12 billion, 13 billion. I mean, there's so much more to go. Tesla's at least worth $800 billion. Okay, that's a different story.
I'm just saying entry price matters.
This is like 12 billion instead of 10 billion. This is what we're talking about here. Come on, it doesn't matter. Honestly,
that's fair.
Can I ask Carlos and Vitaly a question?
No.
By the way, shout out to 500 people being here. Thank you all for being here. Go ahead.
It was Steve. Steve brought his army, his minions.
Steve, it's because of you. This real what I'm looking at about the Optimus Gen 2 robot poaching an egg? Is this real?
Yeah, and they also
Okay, hold on.
they,
Leave the Tesla conversation. We're gonna have a long Tesla conversation. Let's keep doing
what
a little
what
more
I do
macro
what I do
before we-
want to say about this correlation that you're trying to make between the price of Enphase or the bullishness on solar and the natural gas prices. My energy bill, my electricity rate has never gone down, regardless of how high or low the energy company produces it. My bill has never gone down. So at the end of the day, the rise or lowering of a price increase.
But Carlos, you are already sold. You already have it. So it doesn't matter for you. The prospective client is what matters. So if energy prices are high for a prospective client,
but for a prospective client, the case that you need to make is whatever you are paying now, you can pay less, and in a few years you will pay zero. That has always been the case. So
no, but that's a good case. I'm talking about the market. You have a good argument, Carlos. I'm saying the market didn't give a fuck when interest rates were still at 5.5. So like that, they needed that cut to happen. The thing is, at 70, it was obvious the cut was gonna happen, and that's where the alpha was. But at 180, the alpha wasn't there yet, right? Because interest cuts weren't.
But I don't think the market is looking at the price of natural gas in order to decide and factoring that into the price.
Well, they're looking at growth of Enphase and Enphase guidance.
That's all they care about. They just care about how the company's doing. And I don't think that the energy prices
it's the price of electricity that's dictated by the price of the biggest fuel out there, which is natural gas.
But natural gas does not. My bill has only ever gone up. It goes up whether or not the prices are the same, cheaper, or more expensive.
Look. That's what I'm trying to tell you, is that does not matter to you because you already have solar. You're fine. You're talking about the prospective customers that are going to be buying solar.
It's simple, Chris. I'm actually on your side. Look, Carlos, if my bill is $200, but my solar bill is going to be maybe more, or even equivalent. Even if it's equivalent, I could see people like, is it worth it? Because people don't look out. Hold on. People don't look out 10 years. Me and you know that. They don't think like that. So it's unfortunate.
But that's not what I'm saying. What I'm saying is that the price that you pay for electricity is not determined by the price of the gas that's used to produce that electricity. They're going to raise your rates no matter what. They're going to raise it is.
Carlos,
my rate, as natural gas prices have come down, the effective rate that I pay per kilowatt hour has never gone down. It's only gone up since I moved here. No matter what.
Right.
You sound rational. The problem is a lot of these people are not that rational.
It also depends on where you live, by the way. Your utilities can raise prices based on the feed that actually goes into it. So you got to talk to someone who's in the utility space. Natural gas prices go up. The utilities go to the state and local government and says, hey, listen, the price of natural gas is higher. We need to raise electricity prices. It usually even supposed to come down the other way as well. But most of the time, the utility companies will just say, hey, listen, we have to do CapEx. So we need to keep the price of electricity.
That's what I'm saying. It never goes down. And the energy companies out here are actually incentivizing people to buy EVs. They're actually incentivizing you to use more electricity. They're giving you other benefits. Every couple of months, I come home and there's like a bag from LADWP of like energy efficient light bulbs in my house. They just leave them on your doorstep, on everybody's doorstep.
They're basically like, hey, buy an EV, just don't put solar, okay? Just don't do that.
Okay, let's move on from Enphase before we get to Tesla. Here's the macro question to the audience: how does 2024 end up not going the way we want it to go? Steve, I'm gonna start with you. Stop playing World of Warcraft. Pay attention. You're on the podcast. There's 516 people.
No, he's on TikTok.
What do you think? You're the guy from FTX, Steve?
No, I'm not. Trust me, if I was playing WoW, I wouldn't be paying attention right now.
Okay, Steve, given you are our CNBC macroeconomist contributor for today, there's 522 people here. We usually get 450. 60 more people came because of you. You saw that math I did? 520 minus 460. That was really good math.
That's actually 80.
Oh my God. I want my money back from Adia.
Wait, no, 520 minus 460.
Oh, I thought you said 540. Sorry.
No, it is. I know you
460.
My mom's a math teacher by the way. Steve, how is 2024 a bear market? How did we get into a recession?
If unemployment goes up, if this 3.7 read ends up being an anomaly, and you get 4.1 at the next one, and then it goes up the next month after that, and you get a recession. At this point, that's the only thing that I see that could derail this, because the low point was 3.4, 3.5% in June. So since 1948, every time that unemployment has gone up by 1 percentage point, a recession has immediately followed. That's the only thing right now. In the last report, it came down, which was very good, and why I was very worried about today's call. I thought today's Fed call was going to go much different because unemployment came down, but it didn't, thankfully. And if that number starts going up, I'd be worried about another hike, and that 2024, at least the first half of it, doesn't play out the way we think it is going to. But right now, everything looks pretty good.
So I just want to point out, we are going to climb a wall of worry. It's never just a straight shot up. So especially the second year, people are wary if we are actually in a bull trend or a bull market. I think the same thing is going to happen. And yes, there will be pullbacks. I agree with Chris on that. Maybe January, February, I don't know. But I think we end once again the year next year way higher, especially with Bitcoin and everything in the halving. I think it's going to be a magnificent year next year.
Yes, look at the Qs. We're still significantly off the Qs high of 2021.
Chris, how does 2020, or Carlos, you want to go? How does 2024 get fucked? And then we'll do Chris.
China invades Taiwan, a black swan event surrounding the Ukraine war, reemergence of some sort of global pandemic, whether it's like a climate crisis pandemic or another virus. I think that's really the only thing that can stop this, to be honest. I don't know if even what Steve is saying about like unemployment numbers, it might be a hiccup in the road, but I think as long as rates keep coming down, like you were saying, just trying to chase that yield as those rates come down, it starts a spiral, a good downward spiral, right? But I think if we hit another one of those massive ones, another series of like, whether it's climate lockdowns or viral lockdowns or some sort of massive world event, is the only thing I think that can stop this. Because I think that they're ready to do some more printing and some more QE, you know. So,
okay, Chris, how does 2024 end up not being what we think it could be right now?
Yeah, I mean, all the same reasons that Carlos just said: war, disease, famine, all those things will add to it. But other than that, I don't see too many things derailing us. I do think that there could be some weakness in maybe January or February of just, the market getting a little bit ahead of itself, and the data that comes out may be a little bit on the high side, like I showed you yesterday with inflation in December likely to be a little bit higher. So I think the market could have a head fake, but for the most part, just let it, just use that as an opportunity to buy a little bit more and just chill. Because I think 24 and 25 are going to be good years, especially with this deleveraging play. There's three categories of area. There's three main themes that everyone should be following. Number one is decarbonization. I think a lot of what Wall Street and everyone is pushing is towards all the technologies that support decarbonization. That doesn't just mean solar. It also means uranium. If you guys have been tracking uranium's been on a tear, dude. So
I wouldn't admit you're tracking uranium.
Oh, yeah. So uranium's another.
First, the only thing I'm tracking is Uranus.
Yeah, okay. Decarbonization, deglobalization.
Steve is like, what have I gotten myself?
Just
He was like, what podcast? He's like, this is not CNBC.
No, you should have joined Cash Flow Chronicles. That's where we have serious discussions. That's where we have serious discussions.
That's where they have boring, serious questions.
Yeah. Deglobalization, because what you're seeing is a lot of supply chains move back to their home countries in the US and stuff. So that's why one of the reasons why you're seeing such weakness in China. So a lot of infrastructure spending, a lot of stuff to support all those things are going to end up coming back to not just the US, but around the world too. And the last thing is decentralization, but that centers around digitization, not decentralization, digitization, because I'm reading this off of Brookfield's last investor day. And so that's the other thing. So you're going to see a lot of money being spent on AI and all these other things. So this is a new technology that's coming up. So anything that requires or anything that deals with digitization is also going to take a lot of money going into it. So that's why for me, I'm playing it via 5G. I think connectivity. AI means nothing if people are not connected to the internet with broadband connection speeds. So those are the three themes that I'm using to.
Well, let me ask you a question, actually, because this is interesting. Look, I have a dividend portfolio too. If growth is back on, and this is for Steve as well, if growth is going to be back on, let's say second half of 2024, whatever, if it's not the beginning, then wouldn't dividend plays not do as well?
No, it's the opposite.
That's a good question. So let me summarize. The question is, if growth is on, markets risk on, dividend, which typically is 6-7% yield if you're lucky, but growth is giving you 10-15%. Why would the market go there? Steve, given your name is dividend streams, what's your answer to that?
So they can both live in harmony. And what you need to remember is you have a very large cohort of an older generation that needs to take a more conservative approach to investing. And as they retire, they're going to look to replace and replicate part of their income that they were accustomed to getting, because Social Security isn't going to cover their entire nut in most situations. So they may not go entire tech. They may go into more income producing assets such as Exxon, Enbridge, Verizon to recreate some of that income coming in. And then you have to remember, we've been in a.
So they're not going to be buying. They're not going to be buying hood leaps, is what you're saying.
No, I don't. I do not think that that's that crap. But the other thing that you got to remember is we've been in a really enticing tech market. Amazon killing it. There's still 6.1 trillion on the sidelines and more money going in because they're looking for yield. So those people, if they are looking for yield now, when tech is, you've had so many opportunities over the past 8 months to get into tech. If they didn't get into tech over these opportunities, they're truly looking to use a money market as a proxy for income. So when that capital comes in on the sidelines, maybe they try to take a catch-up trade with some of that capital, but a portion of that's going to go into income producing assets also. So I think it's going to be a good year for both next year.
Chris, your answer to this dividend question, or agree with Steve?
Yeah. The thing is, if you look at the valuation on a lot of these dividend players, they're at such low levels too. Like you look at Verizon's at a 13-year low with improving cash flows. Like that's the part that I think a lot of people don't get, is that when it comes to dividends and everything else, everyone weights their investment in these dividend companies based on what they can get risk-free from the U.S. government. So if right now you can get 5.5% risk-free, you're not exactly looking to buy Verizon that's yielding 7% because you're still taking on some risk. But if the U.S. Treasury is only yielding you, the 2 years only yielding you 3%, the first thing you're going to do is, hey, I need to buy this stock that, one, is not only giving me dividends, but is also growing its dividends. And that's the part that a lot of people miss out when it comes to dividends, is that they look for the yield today. They don't look for that yield growth. So if you look at something like American Tower has actually outperformed the NASDAQ over the last 10 years. I don't know if you know that, on a cumulative basis, right? Because they keep raising their dividends every single year by like 5 percentage points. So that's the other thing to look at too. So get into companies that are undervalued right now, that not only have the power to generate cash flow today, but that can keep raising prices and keep generating more cash flow. And that's why real estate is such a good investment, depending on when you can get into it, because every year you can raise the rents just a little bit higher, which means that your cost of capital is fixed, but the income that's coming in from that real estate piece is going to be going higher and higher. So even if, let's say, you bought at a cap rate today of about 5% and it doesn't seem that appetizing, next year when you raise the rent, that cap rate goes to 6%. The year after that, you raise the rent again, it goes to 7%. And it just goes on and on and on. And eventually it ends up becoming that you're generating 10, 20% yield on the money that you spent. Like I'm sure VITALY's bought property in 2008 that's not only fully paid for, but at this point generates him a shit ton of income on top of it. You know, so people are going to be gravitating towards stuff like that next year. So I would say dividend payers, especially ones that have a long history of being able to support their dividend, but also can grow their dividend, are the ones that you want to be in.
Or companies with a history of good buybacks. Because that essentially is a dividend.
That helps too.
And there's a lot of companies that have announced.
Dude, there are some companies that do dividends and buybacks, like Accor.
Yeah,
Accor. Look at ATKR.
Look at Exxon. Exxon just announced they're taking their buybacks to $20 billion next year, and the dividend
and 4%. Yeah,
not bad actually. When you think about it, because the buybacks, I mean, the dividends you technically would have, it's income, but the buybacks necessarily aren't. They're more like a cap gain.
So like if you look at Google's buybacks right now, Google's buybacks end up being about 6% per year if you look at it on a dividend basis. Like literally they're buying back six like that. Yeah.
That's
the impact would be. Yeah.
Okay, before we get into the Tesla conversation to end it out, real quick, Warren Buffett, that guy, he bought 10.5 million shares of Occidental today for $558 million. KRIS, any reasons why Buffett's loading up on gas when solar's the future? Like, what's going on?
First, it's not necessarily natural gas in that.
Yeah, it's more
Permian. They have the most acreage in the Permian, I believe.
Yeah, it's oil mostly, right? So the key here is to look for cash flows. If you look at Buffett, his history is just buying companies that generate cash flow. And I think this deal with Crown Rock kind of sealed the deal for me that someone like Buffett was going to be buying in. But more importantly, the value on a lot of these oil and natural gas companies is actually very attractive at today's prices. So oil and natural gas, they go up to maybe $84, which is what the EIA is basically projecting next year. Their break even right now for Oxy is like 60 billion. I mean, it's at $60 a barrel for the new acreage that they just got, and probably 40 for the acreage that they had before. They're paying down their debt really fast. They're increasing their dividend 22%. Bro, I smell Buffett all over this, so.
Smells like Ben Gay up in here.
Didn't you buy Oxy?
Like Ben Gay and Brothers Original.
I did buy Oxy.
Is it doing well for you? I don't even know if it's
it's not that doing well. It's up like 3% today, but because it's a very new position for me. I bought an Oxy and a ExxonMobil.
Okay, so let's get into the conversation tonight. 552 people are here. Thank you for being here. I feel like they're here for you, Steve, because you've got an announcement to make. You called me a week ago, and you had something to say about Tesla. So you've been on this podcast many times. You've said various things about Tesla many times on this podcast. You always bring a crowd with you, so thank you for doing that, Steve. What do you have to say today about Tesla? Go ahead. The floor is yours.
So before I say it, is this video real that I'm looking at?
Yes, they actually had to. Okay. The Optimus video. They actually
is it real?
They actually posted something.
It's not a Google. It's not a Google.
Video. Yeah, I don't know.
Yeah, it's not a Google video. Right?
AI generates stuff.
It's not a Sundar Pichai video.
Oh yeah, it's not.
No. Well, that's why do you think they asked? Right? People were asking. But the other thing is they did post something to clarify that nothing in that video was CG and nothing in the video was sped up. The previous video that you saw Optimus doing the sorting, they sped it up, I think 1.25, 125%. But seeing the robot walk 30% faster, that was real. Seeing the robot sorting the eggs and doing all that, that was absolutely real. Nothing was faked.
So I almost kind of don't want to say this because I don't want people to get the wrong idea, but I'm going to say it anyway because I'm committed. Do not follow me on this.
But I'm all in Tesla.
But what are you going to say?
I'm all in sold SoFi. I'm all in Tesla.
What are you going to say, Steve? Tell the pod what you told me a week ago.
I am currently a shareholder through my wife. I have hated the valuation. I still think the valuation is very unrealistic at the moment. But I'm going to start buying shares of Tesla very soon.
There we go.
And here's why. And I told KRIS that
welcome.
Tesla could go down, and I kind of don't care at the moment.
All right, Steve, you got the next 3 minutes. Floor is yours. Why are you buying Tesla?
What happened to counter the arguments that you were making about cash flows, about they're just a car company?
Yeah, and I think they're all relevant. I don't know what's going to happen with autopilot and FSD. I think all that is still relevant. My bigger thing now is with this robot. I'm more bullish on this robot and that aspect of the business because I think that at a $22,000 price point, and if they mass produce that and get that down, humans love to be lazy. Humans love to utilize money to make their lives easier. And if you get that robot to a better price point, I could see that in a lot of households. Forget factories and manufacturing and all those tasks. That could be a helper in a house that does so many different things. And with Tesla's AI capabilities and what they're doing with that, I mean, this could be a huge thing where I may not like the valuation of the company, but I can't deny what they've done, what they've been doing. And I think I'm going to start buying shares next week. I was just
give me the other reason. You said Elon said something at a conference.
I'm not going to say that. Don't say it. That was private. I don't want. No, don't say that.
Elon says something to you privately. What?
No. I told him something I don't want to repeat.
Okay, so you're buying it for the bot. That's the main reason you're buying. Okay.
Can you share this? Can you share this?
And the real question, the reason we should all follow Steve, even though he says it's not financial advice, is because his bricks are real.
Yes, they're certainly not real. But
I think this is what's doing it. You look at where they were August 21st, some chick dancing on a stage, not being taken seriously. About a year later, they're showing how they're using the FSD technology, and the thing is recognizing and doing some basic tasks in the office.
How can you guys sleep with this thing in your home? This is not a thing you want in your home, man.
Absolutely.
I will wash my own dishes. Okay?
I am buying one of these immediately. Are you
Me too.
me?
And 20,000. I'm
listen,
a customer. 100%.
To your point,
I'll buy one immediately. Make it available.
I'll put a pre-order right now.
Do the dishes or do anything.
This is how the world ends. You guys are fucking supporting.
By the way, even if it just does the dishes, that's all it does.
One less thing I have to do.
Steve, to your point, Elon has said on several calls that he sees the bot being the biggest generator of Tesla, or the biggest growth vector for Tesla stock in the next couple of years. Yes, initially they'll be testing them in the factories, and that'll probably be the first sets of orders, but it's those second and tertiary levels of use cases, like you said, an assistant in the house. Think about all the people that have like an elderly parent at home. Sometimes they're by themselves. Now you have somebody there, and if you attach the LLM, the Grok LLM, now you have someone that can be sort of like a companion and help the elderly, helping with things around the house, and also never forgetting, right? Here, do the dishes, take out the garbage, turn off all the lights, lock the doors, blah blah blah. Even a much simple use case for simple security. A lot of companies can just get one or two or three of these to walk the perimeters of buildings and notify a human being in case there's an issue.
Why are you laughing?
What's going to happen? You're going to come home. This thing is going to be choking your wife to death. You're going to be choking your wife to death. You're going to take this stupid thing. You're going to take this stupid thing to the shop, and it just thought it was doing dishes with your wife's neck. That's what's going to happen. Fuck the robots. Okay?
And now it's going to be like I come home and, why are you in bed with?
Right.
Like, I paid $20,000. I want something real from this.
Is that a loaf of bread?
Y'all are too happy.
What are you doing with that?
On the other side of
it, robots, man.
I still stand by my comments about the vehicles, because I think the vehicles have a problem, and I don't know how big the problem is going to be, but I do think that cutting the cost of a lot of those vehicles is not necessarily a great thing for existing customers. It's a great thing for acquiring new customers. But for anybody, you guys own Teslas, I own an expensive car. If you come out with those types of cuts right after I buy it, a year later, I'm going to be pretty pissed on the resale value.
Steve, I would buy, it's happened to me so many times. I would buy the most powerful Apple Mac computer within 6 months. That model's obsolete, and there's laptops that do what that one does for half the price. That's what technology does.
Are a lot less expensive.
That's what a Tesla car is. It is a computer on wheels. It's not a traditional mechanical machine. So it's just not the same.
So I think the model of owning cars is going to be slightly different, because, for example, we bought the Model Y. I have the Model Y. I have two of them. And even a year and a half or so later, after I bought my wife's Model Y, my Model Y is better than her Model Y. Like, enough that it matters. You know what I'm saying? So what is the Model Y 5 years from now? Like, I'm saying, I know Elon keeps saying the full self-driving computer on the car will, but probably not. It's probably not enough. The one 3, 4, 5 years from now is the one that's going to actually be FSD, fully compliant. So I'm just saying it's a computer. You have to upgrade it. Unfortunately, that's the way it's going to be.
Yeah, but the one barrier has been, sorry, we just want to make this point. The one barrier has been the cameras, and the people that have, say, hardware 2 or hardware 3, they will upgrade your cameras for free, because the hardware. Yeah,
but what happens to that computer? They're not upgrading the computers.
No, the computer can run it. It's the cameras. The cameras have been the barrier for the older cars. So they upgrade your cameras for free, so that your older model can use the current version of the software.
Right now, for example, they're putting cameras. The Cybertruck has a camera in the front, which might be necessary for full self-driving. We don't know yet for the final version. If that's the case, nobody has that, right? So except the new cars coming out.
But the V12 doesn't need that.
I'm just saying that there are issues that, but my point is, it's a piece of technology. It's going to improve tremendously. And there's going to be an upgrade cycle. It's not going to be like owning a car for 20 years. I don't think that's going to work now for a while.
I listen, I agree. And I think Tesla will actually buy back a lot of those cars from customers. If and when they get their robotaxi network up and running, they'll just take the cars.
Like the Apple program, bring in your old Tesla.
It's exactly the same. It's exactly the same. I mean, I know you're joking, but that's exactly the same.
I'm not
Or
sold
they just
on the
disassemble it and use
robotaxi
what parts they
program,
can.
and I don't know where FSD is going to be because of government regulation. I do think there's some problems with auto, but this bot thing changed my mind for a lot of reasons. And Tesla has the capital, they have the engineering precision, and they have the following, and people are lazy. And look, I may hate the valuation, but I can't discount the fact that there could be a gigantic opportunity if they're first to market with this and it's good and it can cook, it can do dishes, it can do whatever. I cannot discount that people are going to buy this. And at that price point, if Tesla comes out with some type of financing for it, it could be a home run. And look, I may lose money on this, but I'm willing to start my own position and buy into it every month or every 2 months and acquire shares. And if it goes up, I'll buy into it. If it goes down, I'll dollar cost average. And if I'm wrong, I'm wrong. I'm not going.
But just to be clear, Steve, you're only buying it for the bot. You don't think the car has any.
I think
value.
the bot could be bigger than the car business.
So you're buying Tesla for the bot.
Here's what's absolutely crazy about this. Like, I'm super happy to have you in the game, but I did not think that would be it. And it's crazy to me that was the thing. It blows my mind.
But that's what crazy Tesla is, right? They can attract people from all these different angles, right?
But you got to think about it. People are lazy, and there is just so many things that this can do. Well, I mean, you start really going down the derivatives of what this could mean and how this can free up time, because people buy cars to not use public transportation. People have a cleaning service come in so they don't have to clean their house. People look to outsource things. People utilize Uber Eats and DoorDash instead of going to the store. This is the next step of that. And if they're first to market because Boston Dynamics and these other companies are, in General Dynamics, they're more military geared. They're not doing a consumer thing that we know of. And Tesla's brand and Elon's reach.
Can you just share this while he's talking?
This could be huge.
Yeah.
And also it could be interesting that the full self-driving actually ends up being more on the robot for an earlier period than as opposed to the car, you know?
Well, what's interesting now is they have 2 separate product lines that are helping make FSD better, because the robot is using the FSD software. They were actually joking that on earlier versions of the bot, in order to even get it to do anything, they had to take it to a parking lot, because that's all that the FSD was trained on. So they had to start training it on cars and having it understand where it was in space because of the parking lot. I was most impressed with the hands and the fingers, the fact that it's
very impressive. And KRIS,
and this too.
You guys have never watched The Matrix before,
do you see that? Do you see
that? The dexterity of his hands working with those eggs.
Do you see that?
And here's the biggest thing. If this becomes a Terminator scenario, it doesn't matter if you own one in your house or not. We're all screwed, so it doesn't matter.
The other thing
but I'd rather not support the development of the thing that's going to end the world.
Okay, but here's
but you're a capitalist.
It's coming. It's coming anyway.
It's coming anyway.
It's coming
anyway. We might as well be on the side of it. I mean, I'm buying it next week. I already, KRIS, I'll text you the chain. I plan on selling SLG options and funding this through options by selling cover calls against my position in SLG, because the premiums are so big right now that this just makes sense.
I haven't even looked. I have to look.
Dude, look at the February chain. Look at the 55s.
Wait, the February chain of what? Of Tesla?
No, SL Green.
SLG. Quick question for you guys. Would you sell SLG or keep it here? Someone asked in the chat.
I mean, I'm not selling.
Okay.
I'm not selling right now either. I may end up selling some covered calls if one.
Okay. Are any of you guys doing any portfolio rebalancing, whether that's selling? Well, here's the question to everybody. We can end it out in the next couple minutes. What percentage of cash are you in? Are you buying into this rally? Are you leaving it on the sidelines? And are you selling anything? Let's start with VITALY.
No, I'm not selling anything. I've only been buying. In fact, I bought Enphase even as 3 days ago or whatever it was. I'm just accumulating shares of things I want to own. I'm not selling it, but I'm only in 10% cash right now. So I do want to use it. I was hoping that Powell would not actually fuck us and we would have some more just buying opportunities because I do have a little bit of cash.
And question, is that cash getting 5% somewhere? or where is that cash kind of?
It's sitting in the brokerage. I guess they're paying something.
Okay.
It's probably a
Something.
money market sweep. So I gotta go.
they're probably
I'm
paying
gonna
something.
answer that real quick.
Okay, go
I
ahead,
have
Steve.
no
Okay.
idea what percentage
Dude,
cash I
they're
am.
up 200% today. The
Yeah, that's why you
$55.
sell the covered call on the
Holy shit.
Yeah, I'll text you later. I gotta go
Okay.
take care of something.
Yeah,
But
that's fine.
yeah, I don't know what percentage cash I am. I have
So you have so
liquidity
much
on
cash, you
hand.
have no idea how to calculate. The
No,
percentage.
I don't know what the percentage is. I got cash that's sitting in the CD that
Look under your
is
mattress. How
happening.
much
Wait,
percentage?
wait, hold on. You said you have cash sitting in a CD. No one
Yeah.
uses that. We use Spotify now. We don't use CDs. Okay, like I don't know.
boy.
No,
Oh
you
boy.
can't do
I was
that.
actually kind
I'm
of
not
shocked at that.
going for any of that.
That was
Wait,
a good
wait,
one.
hold
That was
on.
a good one.
I'm not
Whoa,
It was a good
repositioning.
one.
And that's the clip that'll get cut out of
That
this
was
whole
a good one.
episode. That's
And
going
I
to be the
will
one
be
that gets
buying
I
cut.
know
Whoa.
it's corporate debt. Okay, I'm not. I know
What does CD stand for?
corporate debt. It's
No. In terms of music.
circular
He
disc.
doesn't know.
Compact
Oh
disc,
shit!
asshole.
Oh my
Compact disc.
I
All
always
right,
get it
guys,
with
it's been
those.
fun. I gotta go.
Yeah, Steve, what percentage of your portfolio is in Pokemon cards?
Oh yeah, Steve.
He's out.
Oh, but he's actually,
Fucking
dude. This guy for 10 weeks was like, "Amit, we got to do Pokemon." I was like, "No,
saw that
Steve,
video
we're not doing
with the
Pokemon. We're buying
fucking
Palantir."
Pokemon cards. I'm like, are you serious? You're
It's all brick. I can't tell what it is.
Yeah, I mean, I got.
We're doomed.
Dude,
Okay, hold on,
Pokemon
Steve.
cards
Last
have
question. Are
better
you
ROI.
selling anything, Steve, or are you just buying?
No, I'm very happy with what I have. I'm not selling, and I'm adding.
Okay,
We're talking
cool.
about your portfolio, not your wife.
Oh my god.
He's like, I'm very happy with what I have. I don't want to.
Steve, thank you for joining. We love you. You brought a big
Yeah.
audience. Thank you so much.
I just want to point out Steve had Pokemon cards and he wouldn't buy any end phase.
Seriously.
I just want to point that out.
He was pushing them.
He was doing that over Palantir at $8.
Yeah.
Okay, Chris, what are you doing with your portfolio right now?
Nothing. Actually, I'm happy to. The only thing that I may end up doing is I have some index funds that I may end up selling the SPY and instead buy the IWM. But that's about it.
Really? But you said a lot of those companies are unprofitable. I mean, or
Yeah,
like shitty companies. But like,
I'm looking at more of like this is the one that I'm looking at. The mid. Hold on one second.
if you put it up on the screen, I can.
Yeah.
Oh,
Just look at mid cap Russell, and I'll give you the ticker symbol.
Wait, you're
for
looking
it.
at Solar Edge?
No, that was the old one. He was looking at.
I'm
Yeah.
like, what?
Maybe he's looking at Solar Edge too.
Hold on.
I'm like, what?
Mid cap Russell. Oh, so it's not IWM then.
No. Russell.
Oh, it's I think it's 3041 right now, right?
IWR.
Okay, cool.
Yeah. So if you look at, you can open up the holdings and look at the companies there. So that's what I would probably be buying.
Okay. So and what percentage of cash are you in? If you're
Right
in?
now, 10%.
Okay, so we got two people with 10% cash. I'm in 18%, so basically the same. And are you selling aggressively, Chris, given the news we have now, or you're kind of just like, I'm gonna buy into?
No, I'm gonna buy into things if I need to, but for the most part, I think I'm gonna stay with that 10% cash until January, because I think that there could be a pullback in January, and I want to have some dry powder in order to be flexible with it.
Okay, Carlos.
I don't know the percentage, but I have a good bit of it in cash right now, and I'm trying to deploy. I am going to be selling my SoFi calls tomorrow. I'm up 110%. I just looked, and I'm like,
Why is that $9 right now?
yeah, I'm like, I could wait for more, but no, when you're up 110%, that's it. I got the return, and I'll probably, I don't know, I might redeploy it, or I might hold it, or I might actually just get it more into Bitcoin. It was like some of you guys know, I've been buying $50 a day of Bitcoin for I don't know how many months now, and I think I've been able to accumulate about half a Bitcoin or so, and I just want to round it out and get more. I think that's going to be the biggest performer of next year.
Can you share my screen real quick? So this is what I was talking about, the mid cap Russell IWR. So you can see here that historically they've actually been pretty good performers, even during like this whole year of weakness. It didn't really go down by much, right? Because these are some of the best companies in the Russell. So if you look at IWR holdings, you're seeing like strong companies all over there. So right.
Okay.
Hold on one second. Holdings.
Let us know in the chat. too.
My newest position, if anyone wants to shit on it, I posted it on Twitter. I bought Dollar General. I've been traveling all over the South. And
dude, I was actually thinking about that.
Hold on. There's so many Dollar Generals. I just was like, what the fuck? Why am I not buying Dollar? And also Waste Management, which is hitting 52-week highs. So I didn't buy that. But everywhere. Every state I am in, I see
Yeah.
a Dollar General, and I see Waste Management. So
Screw
no matter
every
what,
state. Every other fucking mile, you see a Dollar General.
it's all over there. It's like litter.
Really? I don't
It's
see it
just
in
everywhere.
Jersey as much as you guys.
And I've asked people to give me the bear case against Dollar General. Like, actually give me what is the bear case against Dollar? And the only thing they can say is they don't like it, and there's a bunch of crackheads there. That's not a bear case. That is not something that I care about, because crackheads need things from Dollar General too. So that is not an actual bear case. So I'm gonna keep accumulating Dollar, and I'm already up. Unfortunately, it's already going up, so that's sad. But I'm gonna keep buying this one.
So take a look at this, Amit. So this is what, have you ever seen what a Dollar General looks like?
Yes,
I
I've been
went
to one.
Okay. So I went to one that looked like this. This is one of their newer concepts that they had. Dude, it had like fresh food, groceries, all sorts of things that you normally would not find at like just a regular Dollar General. But it's almost like a staple for people, because the entire time I was there were people going in, coming out, going in, coming out. So there's definitely value there, man. So
so I had somebody tell me Dollar General sucks on the Twitter. Dollar General, I go there all the time. Dollar General sucks.
Like I go there all the time. Right?
Like,
and here's the thing about Dollar General, because there's a couple of them by me. You always go in there looking for one thing, and you come out with 20 because it's so cheap. You're like, well, I could grab this, I could grab this.
Exactly.
Yeah, and if anyone thinks
same,
that you're buying at highs, look at this. This is where Dollar General
it's 50% off. So and that's what I was thinking. Like, okay, so I'm doing the KRIS move to the mean.
Yep.
No, you got to do some spreads on Dollar General.
No, I'm not interested. I want the divvy
spreads
on it. Honestly, it's in my dividend portfolio. I'm not going crazy in Dollar General, but I'll keep accumulating that just for dividend purposes.
Yeah.
Okay.
They might have some issues very short term, only because of like the thievery and stuff, but they're fine. They can manage it.
Well, I looked over their 5 years. They actually did pretty well until this last year. So I'm assuming there is some return to the mean here.
I don't know how that is in your state, but they're cracking down on that shit now, man. They're not tolerating all.
They're hiding everything. They're putting all the condoms behind.
No. There's dudes with guns. There's dudes with guns. At Home Depot, there's two dudes. It's very clear who they are. They've got guns.
I think that could be in California. I mean, I've been traveling all over. Like they don't have that, and honestly, I can see theft being rampant. I could see that. In fact, one guy who not more than one person who lives around these areas says the people who go to Dollar General are usually obviously poorer, so there is theft. He was telling me about the whole thing. I go, but I don't see that as a problem. So it is for a certain community, and I'm sure they build the theft into their costs,
and they have insurance.
Yep. All right. That is it for us today. Real quick before we go, I got a bunch of people that reached out that wanted to do clips for us on YouTube. So like 5 of you emailed me. I got connected with you guys. Thank you so much. Feel free to take this video and just screen record a bunch of clips. I did make a Twitter. It's in the chat. It is called Junkies Finance, because Finance Junkies was taken. So if you want to follow,
Garcia's our first follower. Yeah, Garcia.
Wait. You didn't check the Finance Junkies?
I tried, bro. I tried. Like apparently, I tried a bunch of them in the morning. But Junkies Finance until we buy the real name eventually with Dollar General gains.
Shit, you don't even have a picture there.
I don't even have a picture.
Hold on. Let me see if I'm the one that actually owns Finance Junkies, because I thought about this a while ago.
That would have been.
Let me just double check.
Move.
And don't forget, we have a website. I paid for a website.
I didn't even know. Okay. So we will be posting fun moments like the Uranus joke on this Twitter account, and you guys can find
I'm
it.
sorry. I think I have Finance Junkies.
Get the hell
it's
out of
GA.
here.
No.
I'm telling you. I think it's me. I have to look and see.
No. Someone else does. Someone else has Finance Junkies. Unless you were from Georgia and from 2009.
No. When I made this account for me, when I made my new account, I got one that was Finance Junkies.
But look at this. This guy from 2009 has Finance. We got to email this guy and be like, yo, like Twitter should retire usernames if they haven't been used.
How does he spell junkie?
Junkie. Junkie.
Yeah.
Junkies.
Oh, but he
spelled it right. Yeah.
Damn, bro. We were 10 years too late.
I did a group called Finance Junkies, like on here, communities. So I have a Finance Junkies group right here. So, but I didn't really post anything. I was just like, oh, let me grab this before someone else does. So
what's the handle, Amit?
Junkie Finance.
Junkie with
Junkies Finance.
Junkie Junkies Finance. It's not coming up.
Correct. Junkies Finance. I put it in the chat. You can click on from there.
Junkies Finance. It's not.
But this was a fun one. Obviously, the Fed made a lot of decisions today. We'll see what happens tomorrow. Oh, PPI came in. We didn't even get to talk about that. That came in lower than expected, which was really good.
All right, I just followed it. So everybody follow Finance Junkies.
Oh, I could have done it with a Z. Well, maybe that looks kind of ugly.
No. Leave it alone. Yeah.
We'll eventually change it. We'll get the Dollar General gains and we'll buy it from the guy in Georgia.
Yeah.
Can't tell him how successful the pod is. Just be
offer him right now 200 bonus.
He finds the
He
pod.
hasn't used it since 2009.
And if we're all on tomorrow, I got a fun question to pose to us and the chat. I think it'll be fun.
You don't want to ask it right now? You want to ask?
No, because it'll start a whole conversation, and
okay.
I gotta go to work. But tomorrow,
yeah, this guy. Let's offer this guy. This guy hasn't posted anything since 2009. Like that's his last post. Finance Junkies.
We could offer him to take it over, or just invite him on the show, and
real quick. All right, if you guys got to go, I got 5 super chats. Let me get them through real quick because we did get 5 super chats. Real quick, Mike's Oxhard, $5. 2024 will be a black swan event. Biden being removed from office. Trump will have a harder time beating Newsom. Newsom will be even worse on the economy. Okay, so that's your bear case. Newsom becomes president.
I responded to that one. I don't think that they're going to remove Biden from office because they're not going to give the keys to Harris. And if anything, they would say he's just not going to run again. And Trump will have a harder time beating Newsom. No, I don't think he'd have a hard time. I think it's going to be the same either way. It's just, Newsom will be even worse for the economy. That I would agree with. Okay,
Mike's Oxhard again. Last donation, but Optimist Ham is literally most of the global economy. I think that's why Steve is interested. So I think we would all agree.
Yep.
ET, $5 super chat. Thank you. Groceries. Also look up Atlas Robots swearing mod for a good laugh, not a bribe. Junkies to the moon. We'll do this tomorrow. At the beginning of the pod. Atlas Robots swearing.
Thanks, ET.
Okay.
And P says, Chris, on CNBC, they called Broadcom the Berkshire of tech and said Hawk is one of the best capital allocators in history. 1,100 and all-time high.
Hawk 10. Yep.
All right. Thank you, everybody. Please like, please subscribe. Hope you guys are enjoying some of this finance news on YouTube, on a different section of YouTube that's not CNBC, but is our own little spin. We hope you guys are enjoying it. It's been fun building it out. And we'll be back tomorrow, 9 p.m. to discuss the markets.
Later.
Thank you, everybody. Have a good one. Good night.